There's a country quietly accumulating gold at a pace that would make even the most aggressive central banks blush. And the strangest part? Almost nobody in the Western financial media is talking about it. While everyone's eyes are glued to China's official reserves or Russia's post-sanction buying spree, this nation has been methodically, systematically, building one of the most significant gold positions in modern history. And when I show you the numbers, you're going to understand why this matters for your wealth right now. Let me paint you a picture. It's early 2023, and a small team of analysts at a London-based precious metals consultancy notices something odd in the import data. Gold shipments to one particular country have tripled year over year, not doubled, tripled. But here's where it gets interesting. The official reserve numbers reported to the IMF barely budged. Someone is accumulating massive amounts of physical gold, and they're doing it off the books. This isn't speculation. This is documented in customs data, refinery reports, and shipping manifests. The gold is moving. The question is, where is it going? And more importantly, why? The country I'm talking about is Turkey. Now, before you dismiss this as just another emerging market hedging against currency volatility, let me show you what's really happening here. Turkey's central bank has been on an absolute tear, adding gold to its reserves at a rate that outpaces almost every other nation on Earth. In 2022 alone, they added 148 tons. In 2023, another 87 tons. But here's the kicker. Those are just the official numbers. When you dig into the import data, when you track the physical flows from Swiss refineries, from London vaults, from mining operations in Africa and Central Asia, the real number is likely double that. Maybe more. Why does this matter to you? Because Turkey isn't accumulating gold because they think it's a nice, shiny metal. They're accumulating gold because they've seen the writing on the wall. They've watched the dollar weaponized through sanctions. They've experienced firsthand what happens when your currency loses 80% of its value in a decade. They've learned the hard way that in a world of monetary chaos, gold is the only asset that can't be printed, can't be sanctioned, and can't be devalued by a central bank's printing press. And they're positioning themselves for what comes next. Let me take you back to 2018. The Turkish lira is in free fall. Inflation is running at 25%. President Erdogan is in a public feud with the Federal Reserve, calling interest rates the mother and father of all evil. The country is facing a full-blown currency crisis, and in the middle of this chaos, something remarkable happens. Turkish citizens start buying gold. Not just a little gold. We're talking about a nationwide rush into physical metal that rivals anything seen in modern history. In 2018 alone, Turkish households purchased over 200 tons of gold bars and coins. That's more than the entire gold reserves of countries like Sweden or Belgium. But the government was watching. And they were learning. Because while the lira collapsed, while inflation ravaged savings accounts, while the stock market cratered, gold held its value. In fact, in lira terms, gold soared. The people who had converted their savings into physical gold didn't just preserve their wealth, they multiplied it. And the Turkish government took notes. They realized that in a world where currency wars are the norm, where sanctions can freeze your dollar reserves overnight, where the global monetary system is fracturing, gold isn't just a hedge. It's a strategic necessity. Fast forward to today, and Turkey's gold accumulation strategy has become one of the most sophisticated in the world. They're not just buying gold on the open market. They're incentivizing domestic production. They're offering tax breaks to citizens who convert their gold jewelry into bullion. They're accepting gold as collateral for loans. They've essentially created a parallel gold-backed financial system operating alongside their traditional banking sector. And the numbers are staggering. Turkey now holds over 540 tons of gold in official reserves. That puts them in the top 12 globally. But remember, that's just what they're reporting. The real number, when you include gold held by state-owned banks, gold held in sovereign wealth structures, gold accumulated through off-market transactions, could easily be north of 800 tons. Maybe more. Now, here's where this gets really interesting. Turkey isn't accumulating gold in isolation. They're part of a broader trend that's reshaping the entire global monetary system. Look at what's happening across the emerging world. China added 225 tons in 2023. India added 19 tons. Singapore, Poland, Czech Republic, all adding gold. But Turkey's pace is different. It's more aggressive. It's more urgent. And when you understand why, you'll understand what's coming for the dollar, for Western financial markets, and for your wealth. Turkey sits at the crossroads of three major geopolitical fault lines. To their west, a European Union struggling with energy crises and economic stagnation. To their east, a resurgent Russia cut off from Western financial systems. To their south, a Middle East in flux, with Saudi Arabia and the UAE openly discussing alternatives to dollar-based trade. Turkey has a front-row seat to the fracturing of the post-World War II monetary order, and they're positioning themselves to benefit from it. Here's what most analysts miss. Turkey isn't just buying gold as a hedge against lira volatility. They're buying gold as a bridge currency. They're positioning themselves as a hub for gold-backed trade between East and West, between the dollar bloc and the emerging BRICS Plus alternative system. Think about it. Turkey is one of the few countries that maintains relationships with both NATO and Russia. They trade with Europe and China. They're a member of the G20, but also courting membership in BRICS. And in a world where trust in fiat currencies is eroding, where sanctions have made dollar reserves a liability for many nations, gold becomes the universal language of trade. Let me give you a concrete example of how this works. In 2023, Turkey and Russia negotiated a deal where Turkey would pay for Russian natural gas, partially in gold. Not dollars, not euros, gold. This wasn't widely reported in Western media, but it's a seismic shift. It means that gold is already functioning as a settlement currency for major international trade deals. And Turkey is positioning itself as the facilitator of these transactions. They're building the infrastructure, accumulating the reserves, and establishing the relationships to become a central player in a gold-backed trade network that bypasses the dollar system entirely. Now you might be thinking, okay, but Turkey is a relatively small economy. How much does this really matter? And that's exactly the question the mainstream financial media wants you to ask, because it misses the point entirely. Turkey's gold accumulation isn't significant because of Turkey's economic size. It's significant because of what it signals. It's a canary in the coal mine. It's a preview of what's coming as more and more countries realize that dollar reserves are a strategic vulnerability, not a strategic asset. Think about the mechanics of what's happening. For decades, the global financial system has operated on a simple principle. Countries earn dollars through trade, park those dollars in U.S. Treasury bonds, and trust that those reserves will maintain their value. But that system is breaking down. The U.S. has weaponized the dollar through sanctions. They've frozen Russian reserves. They've threatened Chinese banks. They've used access to the SWIFT system as a geopolitical tool. And countries around the world are watching and thinking, if it can happen to Russia, it can happen to us. So what's the alternative? Gold. Because gold can't be frozen. It can't be sanctioned. It can't be printed into oblivion by a central bank trying to finance massive deficits. And Turkey is leading the charge in demonstrating how a country can build a gold-backed alternative to dollar dependence. They're showing other nations that it's possible, that it's practical, that it works. Let me show you how deep this goes. In 2017, Turkey repatriated 220 tons of gold from the Federal Reserve Bank of New York. They physically moved the gold from vaults in Manhattan to vaults in Ankara. At the time, this was reported as a minor story, a quirky move by an unpredictable government. But look at it through the lens of what's happened since. Russia's reserves frozen. Afghanistan's reserves seized. Venezuela's gold held hostage in London. Turkey saw this coming. They understood that gold held in New York or London isn't really your gold. It's gold you're allowed to access as long as you play by the rules of the Western financial system. And they decided they wanted their gold where they could actually control it. This is the part that should terrify anyone holding significant wealth in dollar-denominated assets. Because if Turkey, a NATO member, a country with deep economic ties to Europe and the United States, doesn't trust the Western financial system enough to keep their gold reserves in New York, what does that tell you about the future of dollar hegemony? What does that tell you about the stability of the current monetary order? And here's where it connects to your personal financial situation. You're watching the same dynamics that are driving Turkey's gold accumulation play out in your own economy. Currency debasement through endless money printing, inflation eroding purchasing power, financial repression through negative real interest rates, the weaponization of the banking system through debanking and account freezes. The same forces that pushed Turkey toward gold are present in every Western economy. The only difference is timing and degree. Quick aside here, because this is relevant. If you're sitting on $100,000 or more in retirement accounts, I put together a free guide on how gold IRAs work. It's in the description. Covers how to get physical gold into your retirement account without tax penalties, how to maintain the same tax advantages you have now, and how to actually take possession if you want to. Worth checking out if you're thinking about this stuff. Anyway, back to what's happening with Turkey and why it matters. So let's talk about the mechanics of how Turkey is actually accumulating this gold, because it's not as simple as just calling up a bullion dealer and placing an order. They're using multiple channels, multiple strategies, and it's creating a blueprint that other countries are starting to follow. First, they're buying directly from domestic production. Turkey has ramped up gold mining operations significantly over the past decade. They're now producing about 40 tons per year domestically, and every ounce of that production goes straight into reserves or into the domestic market. None of it is exported. Second, they're incentivizing citizens to convert jewelry into bullion. Turkey has a cultural affinity for gold. Turkish households hold an estimated 3,500 to 5,000 tons of gold, mostly in jewelry form. The government has created programs where citizens can bring in their old jewelry, have it melted down and refined, and receive bullion, or deposit it into special gold accounts at state banks. This serves two purposes. It mobilizes dormant gold into the financial system, and it builds a culture of gold ownership that supports the lira by providing an alternative store of value that keeps wealth within the country. Third, and this is the sophisticated part, they're using gold swaps and complex financial instruments to accumulate gold without it showing up immediately in official reserve figures. A gold swap works like this. Turkey's central bank enters into an agreement with a commercial bank or another central bank, where they exchange lira or other currencies for gold, with an agreement to reverse the transaction at a future date. On paper, this looks like a temporary transaction. In practice, these swaps often get rolled over indefinitely, effectively functioning as permanent gold acquisitions. This is how Turkey can show modest increases in official reserves while actually accumulating far more gold behind the scenes. Fourth, they're accepting gold as collateral for loans and using it within their banking system in ways that effectively increase their gold position without traditional purchases. Turkish banks now offer gold accounts where depositors can hold physical gold instead of lira. The banks then use this gold as collateral for international transactions, creating a multiplier effect where the same physical gold backs multiple financial activities. Now, let's zoom out and look at what this means for the global gold market. Turkey's accumulation, combined with similar moves by China, Russia, India, and other emerging economies, is creating a structural supply deficit in the physical gold market. The World Gold Council estimates that central banks globally added over 1,000 tons of gold to reserves in 2022 and again in 2023. That's the highest level of central bank buying in over 50 years. And Turkey is a major driver of that demand. But here's the critical point that most analysts miss. This isn't just about central banks buying gold as a portfolio diversification move. This is about central banks preparing for a new monetary system. They're accumulating gold because they know that when the current dollar-based system finally breaks down, when the debt becomes unsustainable, when the currency wars escalate into something more serious, gold will be the asset that allows them to participate in whatever comes next. Whether that's a formal gold-backed currency, a basket of commodities, or simply bilateral trade settled in gold, the countries with the largest gold reserves will have the most influence in shaping the new system. And Turkey is positioning itself to be at that table. They're building relationships with gold-producing nations in Africa and Central Asia. They're establishing themselves as a refining and trading hub. They're creating the financial infrastructure to facilitate gold-backed trade. They're not just accumulating gold. They're building a gold-based parallel financial system that can operate independently of the dollar. Let me give you another concrete example of how this is playing out. In 2022, Turkey negotiated a deal with the United Arab Emirates for a $5 billion currency swap. But buried in the details of that agreement was a provision allowing for settlement in gold. This means that if Turkey needs liquidity, if they need to access foreign currency, they can do so by pledging gold as collateral to the UAE, bypassing the dollar system entirely. And they're negotiating similar arrangements with other countries. Each one of these deals is a brick in the foundation of an alternative monetary system. Now, let's talk about what happens next. because this is where it gets really interesting for anyone paying attention to gold prices. Turkey's accumulation is creating a floor under the gold market. Every time gold dips, every time there's a sell-off in paper gold markets, Turkey and other central banks step in and buy physical metal. This creates a dynamic where paper prices can be suppressed temporarily through futures market manipulation. But physical demand keeps tightening, and eventually, the paper price has to catch up to the physical reality. We're already seeing signs of this. The premium for physical gold over paper gold has been widening. Delivery delays at major refineries have been increasing. The spread between London and Shanghai gold prices has been volatile, indicating stress in the physical market. And all of this is happening while official gold prices have been relatively stable. That's not sustainable. When physical demand overwhelms paper supply, when the disconnect between paper and physical markets becomes too large, something has to give. And historically, when that happens, the adjustment is violent and sudden. Think back to 2008. Gold was trading around $800 an ounce in October. By December 2009, it was over $1,200. That's a 50% move in just over a year. And that was driven primarily by central bank buying and concerns about currency debasement following the financial crisis. Now, compare that to today. Central bank buying is higher. Currency debasement is more extreme. Geopolitical tensions are worse. Debt levels are astronomical. And countries like Turkey are accumulating gold at a pace that makes 2008 look tame. What do you think happens to the gold price when this reality fully sinks in? But here's what really keeps me up at night. Turkey's gold accumulation isn't happening in a vacuum. It's part of a broader de-dollarization trend that's accelerating. Saudi Arabia is now accepting yuan for oil sales. Brazil and China are settling trade in their own currencies. Russia and India are using rupees and rubles. The BRICS nations are openly discussing a gold-backed trade currency. And at the center of many of these discussions, facilitating these transactions, building the infrastructure, is Turkey. They're playing a dangerous game, trying to maintain relationships with both the Western Bloc and the emerging alternative system. But they're also positioning themselves to benefit, regardless of which system ultimately prevails. If the dollar remains dominant, Turkey has gold reserves to stabilize their currency and maintain purchasing power. If an alternative system emerges, Turkey has the gold reserves and the relationships to be a major player in that system. It's a hedge, but it's also a bet. A bet that the future of international finance involves gold in a way it hasn't for the past 50 years. Now, let's bring this back to what it means for you personally. You're living through the early stages of a monetary regime change. The signs are everywhere if you know where to look. Negative real interest rates that punish savers. Inflation that's officially reported at 3 to 4%, but feels like 10 to 15% in your daily life. Stock market valuations that make no sense relative to underlying economic fundamentals. Real estate prices that have disconnected from incomes. And underneath all of it, a debt burden that can never be repaid in real terms, only inflated away. Turkey understands this. That's why they're accumulating gold. They've lived through currency crises. They've experienced hyperinflation. They know what happens when a government loses control of its currency, and they're taking steps to protect themselves. The question is, are you? Because here's the uncomfortable truth. The same dynamics that are driving Turkey to accumulate gold at record pace are present in every Western economy. The U.S. national debt is over $34 trillion and growing by $1 trillion every 100 days. The Federal Reserve's balance sheet, even after quantitative tightening, is still over $7 trillion. Social Security and Medicare have unfunded liabilities in the tens of trillions. And the political will to address any of this through spending cuts or tax increases simply doesn't exist. Which means the only way out is through currency debasement. Print more money, inflate away the debt, and hope the system holds together long enough for it to be someone else's problem. But countries like Turkey aren't waiting around to be victims of that strategy. They're protecting themselves. They're accumulating the one asset that can't be printed, can't be debased, and has maintained its purchasing power for thousands of years. And the fact that they're doing it so aggressively, so urgently, should tell you something about what they see coming. Let me paint you one more picture. It's 2025, maybe 2026. The U.S. is facing another debt ceiling crisis. The Federal Reserve is caught between fighting inflation and preventing a recession. Geopolitical tensions have escalated. Maybe it's a conflict in the Middle East. Maybe it's a confrontation over Taiwan. Maybe it's something we haven't even anticipated yet. And in the middle of this crisis, a group of countries led by China, Russia, and including Turkey, announces a new trade settlement system backed by gold. Not a gold standard in the traditional sense, but a mechanism where international trade can be settled using gold as collateral, bypassing the dollar entirely. What happens to the dollar in that scenario? What happens to treasury bonds? What happens to the purchasing power of your savings, your retirement accounts, your dollar-denominated assets? And more importantly, what happens to the price of gold when it suddenly becomes the foundation of a parallel international monetary system? This isn't science fiction. This is the logical endpoint of the trends we're seeing right now. Turkey's gold accumulation is a preview. It's a warning. It's a signal that the smart money, the people with access to real information, the governments that understand monetary history, are preparing for a world that looks very different from the one we've lived in for the past 50 years. And here's the final piece of the puzzle. Turkey's strategy only works if gold prices rise significantly from current levels. Think about it. They're accumulating gold as a strategic reserve, as a foundation for trade, as a hedge against currency collapse. But if gold stays at $2,000 an ounce, if it doesn't appreciate significantly, then they're tying up billions of dollars in an asset that generates no yield, no income, no return. That doesn't make sense unless they're expecting gold to revalue dramatically higher, unless they know something about the future of the monetary system that isn't being reported in mainstream financial media. So when you see Turkey adding another 20 tons to reserves, when you see them repatriating gold from foreign vaults, when you see them building gold-backed financial infrastructure, don't dismiss it as the actions of an unstable emerging market. Recognize it for what it is: a sophisticated, strategic response to the greatest monetary crisis in modern history. A crisis that's unfolding in slow motion, but accelerating. A crisis that will eventually force everyone to make the same choice Turkey is making right now. Protect yourself with real assets, or watch your wealth evaporate in a wave of currency debasement and financial repression. The hidden gold accumulation by Turkey isn't just an interesting geopolitical story. It's a roadmap. It's showing you what's coming and what you need to do to prepare. The question is, are you paying attention? Are you taking action? Or are you going to wait until it's too late? Until the crisis is obvious to everyone? Until gold is $5,000 or $10,000 an ounce, and physical metal is impossible to find at any price? Because that's what happens in a monetary crisis. The people who prepare early preserve their wealth. The people who wait lose everything. Turkey has made their choice. Now you need to make yours.